Hello traders and welcome to another technical analysis video brought to you by Orbex.com. You're now surfing the waves with Richard. Today I'm gonna do a follow-up on the recently released quarterly report here based on Elliott Wave technical analysis. I'm gonna follow up on this quarterly report, this big PDF with which contains a larger picture of the markets and some possible projections for forex metals, energies, and indices, some of them. But also I'm gonna update the current charts and also then I'm gonna move towards the intraday charts so we can actually zoom in, right? Now, going a bit lower here, these are the symbols which are analyzed in the quarterly report. Now, again, if you don't have access to this yet, I'm sure that in the description you will find the download link, all right? Or just visit the Orbex blog page, or anyway, just look for the download link. I'm sure that it will be provided once with this video. All right, so let's move on now. The way I'm starting this quarterly report is with the VIX, the volatility index, and of course I'm explaining here, what this is and how this works. Now the point is that I was actually looking at the VIX when it was around 12.42, right? And I was what I'm actually saying here is I'm explaining the possibility. Sorry. I'm explaining the possibility for a possible spike in the VIX, which would cause volatility, of course, causing significant contraction in the indices, right? So basically, volatility returning. So the way this CBOE volatility index, actually the VIX works, is when it goes up, the markets are falling, right? So this causes a fear effect when basically when it goes down. There's a greed period, a complacency period where people are, market participants are keep on buying and buying and buying, right? They're complacent. So when the market starts falling, like it did here with this previous spike in early February 2018, right? That's when the fear kicks in. Now, what it did until then was basically to retrace, right? And if I go on the VIX chart right now, by the way, this is the weekly chart, yeah? And what we can see is that it moved higher, right? And this caused a significant fall in the Dow Jones, S&P 500, Nasdaq, DAX, CAC, and basically mostly everything, right? All the stock exchanges. So, which leads me to think that it could be a possible start of something like this. Okay. Now, during let's say for instance, during the dot-com, bubble, the VIX spiked, and during 2008 spiked again, right? Now, this is just, let's say for instance, this is just for you to keep this in mind. Obviously, I could be right, I could also be wrong, but what if, right? What if it would spike here? This would cause a significant fall in the indices, right? So the point is that it did break out of this resistance right here, and I would expect, let's say for instance, maybe a correction, possibly gaining a support before a new breakout or even stronger wave, right? So we'll see if that happens. Now, for me to get more evidence on this, I'm gonna have to go on the indices as well. So let's continue with the actual PDF. Now next would be the dollar indexes, in which I'm explaining a possibility for a contraction to possibly start right there about 95.30, let's say, yeah, 94.30, 95.30. So this is basically the level in focus. Obviously contains the analysis right here, the technical analysis based on Elliott wave, but also um, some levels and short and simple explanations right here on based on translation of what's the analysis about, right? So now next I'm gonna go on the daily chart on the dollar index, right? And this This arrow hasn't been moved since then, right? Let me just put it back. Now the point is that let's say for instance, it's this idea right here, yeah. If I click the play button, it will load the new bar. So it went as high as there exceeded the 95.30, just went about 95.50, yeah, and then it started falling a bit. And what we're gonna do later on on an intraday basis, I'm gonna on an intraday chart, I'm gonna update this and basically zoom in so we can see more evidence, right, on what would be expected based on this current wave count. Now, moving on to the forex pairs, the Euro USD, let's say right here, I was explaining some possible supports right here, 1 to 150. Sorry, this is instance support at 1.150. Yeah, and 1.130. 1.130 hasn't been hit. Instead, this one has been hit, and obviously the summary right there. So let's just jump on the euro, right? And this is basically the euro. Okay. Now, based on this, let's say this is the time of the pause on a daily chart. So it's June 12th right there. Started dropping a bit. Went a bit lower than I would have expected. So I'm gonna all these charts are gonna I'm gonna go on the intraday and I'm gonna follow up on them, right? So as you can see, this pattern is indeed possible should this occur, so we can actually have the right shoulder, leaving me to think that there could be something coming, right? Not to mention that the French Lengths gap hasn't been filled, right? So this is something to keep in mind. Now, um, we can actually see that it actually held right there, this 1.150, and since then started Euro USD started going up, and then I believe it's in some sort of correction. So for that, I'm gonna zoom in so you can get the bigger, get a better picture. Moving on to the USD JPY. On this chart here, I'm explaining basically how USD JPY could return to those possible falls right there, yeah, and some resistances right there at 111. So let me just jump on the USD yen, okay, and we can actually see that it had resistance right there. I'm sorry, had resistance right there and started falling right there. Now, the point is that I'm going to take a look at this here because this is a decisive moment in the market. Hence the reason why I'm doing this video, and I believe that it could make a difference, right? So we're not really there yet, but pretty soon we would be, right? So this is the uh, post right there and hit 111 and then started dropping. Right now we'll see if this would be the final point. Now so far so good, right? As for the metals, right here I'm doing a, let's say, gold silver ratio analysis in which I'm actually explaining this monthly chart in which I'm explaining the possibility of silver possibly outshining gold in the bullish performance if should a bullish wave start on the metals, possibly outshining gold, right? Silver outshining gold. So the way the structure is labeled is WX and AB, which would leave with a C wave right here, right? So since then, let's say for instance this small move right here, yeah, and some resistances and supports. So let me just go on the live chart right here, XAU, XAG on the monthly, right? And we can see that from then it started rising a bit. So I would be curious to see if this goes like that, so it can actually make an AB with a false breakout right here in the B, and then the C leg. We'll see how that would or could unfold, right? Now, moving on to the gold chart, I did modify it a little bit right here. This Y right here, this B actually broke through, right? So I'm actually mentioning this in the entire analysis. As you can see, there's a vast analysis here on gold on XAU USD. But mostly, let's say for instance, the supports are seen as 1285, 1270, and 1250. So 1250 would be in focus right now. and I'm gonna jump on the gold chart, right? So just as an update, right, broke through right here, all right? So this channel has been broken. Now, the decisive levels, let's say for instance, will be 1250, and I would be expecting a reaction right there, and I will actually explain why, because even if this is a entire pattern leaving this WX and then Y or an ABC, but by the looks of it, it's not an ABC because it's a very, very complex structure which is correcting this leg and this leg is correcting this move. So it's a conflict of degrees between corrections, hence the reason why this is developing as a very, very complex structure right there. Okay, so what I have here, I have five legs on the downside in this A, leaving me to think that a zigzag would occur, and a B wave right there, and a sharp drop. Now notice this, this trend line right here, which it's coming from December 2015 and December 2016 lows, yeah, and it's a very, very strong support. Should it be broken, I would personally, I would kind of lose my faith in this metal, right? Because the next stage, basically the next support could be even 1100. What I would be looking for is obviously a support, right? And a bullish leg for this type of pattern to complete, right? And then obviously I would be looking for that so that the pattern would be complete. However, we'll wait and see. With everything that's happening right now, um, it could be possible. Now next, silver. Right here, this is the silver actually has a much a very complex, not like gold, even more complex, I would say, right? The structure is very complicated, so it's a very complex structure. However, the supports were posted at 16.50, 1635, 1585. I would be very comfortable with this as um, the main support, let's say, possible support. So let me just go on silver right here, and I will explain to you why. Okay. Now this structure, I've modified it, leaving this as a pattern, right? Then the X, and I would be looking for this AB, and then small c right here to complete this possible channel. And I will be looking to see what will happen around 1585. I'm gonna zoom in on this because it would make a difference, and you'll get more details on that, right? So crude oil, let's say for instance, I was looking for crude oil to drop more. It did, but not enough. Okay, so it did go down, but then it started reversing on the upside. However, that doesn't mean necessarily that it's shooting on the upside like that, right? Or towards 80 or 90 or 100 or whatever. So the supports, let's see, 60.50, 54.50, and 45. However, it didn't even hit 60.50, right? So as a summary right there on the on the on WTI on crude oil, let's see, yeah, it went on the downside right here. This is when it went down. Let's say on the quarter report. So as you can see, let me just zoom in there a bit. Okay, as you can see, it went down, then it started reversing on the OPEC sentiment. Okay, however, this doesn't mean that it's supposed to go up. This could occur, right? So we'll just leave it like this for now, and I'm going to take a look at it later. However, this was indeed, um, I mean, this leg was posted before, right? Anyhow, let's continue. Indices. For on this quarter report, I only made analysis on S&P 500 on the 4-hour chart and on DAX, right? The next one will be DAX. So this one S&P 500 was 2783, okay? And I was like looking for a possibility for this wave to finalize somewhere around this trend line, right? Which it did. However, it did not go as high as I wanted it to go towards 2825. It would have been great for me to actually for S&P 500 to honor this FIPS, right? From W towards X and towards 100, okay? But the main direction you can actually see it, right? That's exactly what happened with the S&P. If we take a look at it, yeah, since then started dropping. So here, as I said, I was expecting a slight move up, so I can actually possibly confirm something, but it did. It started dropping immediately. So this made, in my personal opinion, this made the structure look much more complicated. So let's see. Even if this doesn't happen anymore, it can still deliver a rise. Now the point is that there's multiple ways to label this, and labeling it in a triangle right here would be quite difficult. But let's say, for instance, I would be looking at this next move, yeah. If it even goes there, if it doesn't go, right? Let's say, for instance, if it delivers this and it starts correcting in a free, then this would be obviously a corrective structure, leaving me to think that the entire correction could have completed, and this could come while the VIX would spike. Just something to keep in mind as a possibility. Next, the DAX. Let's say this is the analysis on S&P 500, yeah, and the support at 2,700 and resistance to 825, right? So let's just see 2,700. Indeed, it gained support right here, the S&P 500. Okay, not to say that it would be final. The way it looks at it, it's still correcting, in my personal opinion, but we'll see. Yeah, more evidence will be on the upside. The main view is for the downside, obviously. Now the DAX. DAX, I had a view right here in which I was explaining the possibility for this fall to possibly start. I mean, completing the correction and then starting a fall right there. And resistance 13,000, yeah, and support of us 450 and 12,000. Let me jump on DAX right there, okay? And as you can see, this is on still on June 12th, right? And I was explaining the possibility of this be uh, finalizing right there, and then starting a C leg, a bearish impulse. And you can actually see what happened right there. Let me just zoom in. Okay, so completed the B and then started the fall, right? And in the quarterly report, I'm actually explaining expected to complete the current correction at 13,000 and impulsive bearish wave expected to start at around 13,000. So this one played off, right? Now, for instance, that's about it, yeah? Now next, let me just jump on the intraday chart. And by the way, guys, um, for you to keep to keep to be updated on a regular basis, you can join my live webinars, but also you can actually ask for a live session with me. Let's say, for instance, a private session on a screen share. We can go on the chart, share some ideas, and all this. But of course, you have to have a live account. So contact your account manager and set it up. Okay. Now, dollar index on the 2-hour chart, right? So what happened in the meantime, right? Dollar index did go up since then. The way I'm labeling this is in A, B, and a possible C leg, possibly starting right here, and we'll see. The reason why I'm saying that is because if I go on the gold chart, I can actually see, I mean, the way I'm labeling this is in a corrective piece, in a B wave, right? And from there, I'm labeling an ending diagonal in a 1, 2, 3, 4. And we'll be curious because the 1250 mentioned is still on the table, okay? Because it could give a bullish divergence right there. Not to mention that it could end a larger degree pattern, which would make this as the minimum. Um, retracement, if it is a retracement. And the way it's gonna unfold, I'm gonna have more evidence, let's say, and more details about the wave itself, if it's corrective or an impulsive bullish move. As for silver, kind of the same thing, but I would like this to be tagged, which is 16, but mostly the 61.8, which is 1585. So I would actually be very comfortable with this zone, and I would be curious to see their reaction there, because if the reaction is impulsive and could be followed by a zigzag, would be great, because this has massive potential in my personal opinion. Moving on to crude oil, right? Moving on to crude oil. I'm not gonna let it fool me, to be honest, because there is still a possibility for this to actually start as a C leg. So we have a free wave move, an A, then a corrective, then a sharp drop. So this sharp drop can be a false breakout. I mean, false move in the next wave. Typically, I mean, well known to do that, right? So the way this is moving up, A, B, 1, 2, actually not even. 1, 2, 3, 4, 5. So we'll see, because the 5 is kind of looking like an ending diagonal right there. Yeah, and a bearish divergence would be great to see. So patience, and we'll see more later on. But I just wanted to share with you so you can actually see. So Euro USD on the 2-hour chart right here had a move, a free wave move. Yeah, on the upside. Then a very complex structure, WX, WX. Yeah, so WXYXZ, this is a triple free in a B wave, yeah, which created a new low actually, yeah, broke it by a little and started on the upside. Now the way it started on the upside, it could be a leading diagonal, so this fall can basically turn out to be like this, yeah, and one more leg on the upside could occur. It can even be like this directly. So curious to see what would happen. More details, of course. I mean, the views remain the same, kind of. So just check with the uh, with the quarterly report there and the details on the euro right there. Where is it? Okay, no, not this one. Sorry, guys. Okay, this will take a minute. Okay, with this supports. Yeah. For more details, of course, you're more than welcome to reach out to me directly. Pound USD, pound dollar on the 12-hour chart, same thing. Although the leading diagonal is looking to be, I mean, it's more obvious, let's say. And this has been an attempt, and if I would label this as a as an impulsive move, I wouldn't like the way it looks. So just labeling it as a B in a WX and then a B and then an impulse, small one, yeah, for a choppy five-way sequence. But mostly this looks like an impulse, yeah, and this looks like a corrective, leading me to think that this could deliver at least one more leg on the upside. So we'll see more details then. Now, according to how these moves look, I would have, of course, more details, right? USD JPY on the 4-hour chart, the way I'm labeling this is basically in a WX and then A, B in a running flat and possibly a C wave coming, right? Um, and this was posted. Most of them were posted previously. Let's say this was on May 17th. Uh, at that specific those specific levels, 111.25, right? When it started dropping right there. Okay, but also on these levels right there. Again, explaining the possibility for a drop to come. Okay, so this is basically for USD yen. Now the structure looks as a running flat so far in this B, so we'll see if the C leg would take place or not. All right. However, this looks like it could be an option. Now for USD Swiss franc, there's a very complicated structure right here in WX, Y, X, A, B, 1, 2, 3. We'll see if that happens, but by the looks of it, it could deliver this as well. Okay, but not my preferred one, to be honest with you. Anyway, let's move on to AUD USD, which is heading like a, let's say for instance, some could treat this as a bull flag, right, after this move. So it, if it would break out and form this type of pattern, it could deliver this. So again, you see, all of them kind of point in the same directions. Now let me move on to the DAX there. That marvelous drop. And Dax, me and Dax were friends, let's say for instance, because on May 17th, on my previous articles, by the way, you should check them out on the Orbex blog. This is where you will find me, yeah, on the Orbex blog right here. There are some articles and market analysis done by yours truly. So yeah, back to Dax. Yeah, on May 17th, basically started dropping from 13,150 around there as a range, okay, and you guys can actually see what happened. Yeah, so even then, right, started basically dropping, and this is where it was on the quarterly report, somewhere around here, went up and then boom. Yeah, so if I just put, we have 1,000 points, 1,020 points on DAX, so massive fall right here. Dow Jones, interesting, right? Because remember, if I would go back on the VIX, yeah, this small spike caused all those drops on DAX and on S&P, yeah. So the way I'm labeling Dow Jones is as an A, then WX. It's a very complicated structure, by the way. It's a complex structure in this. Even for me, I'm having difficulties with it, but sorry, okay, but um, the point is that what I wanted to do is hit this fibs. So neither S&P or Dow Jones provided that, but there is still a possibility for a triple three in this Y. So WX, ABCY, and then this X, if it starts running on the upside right now. Okay. Now the po how I would like to see it is basically like this, in a free wave sequence. Now, if it doesn't do that and it fails, right, and it starts doing something like this on a smaller scale, then this means that um, there is a possibility for this breakout. So we'll watch and see for more details. However, more details can be seen on Nasdaq. And I like the way the structure looks because even this move on the upside, right? It's creating an all-time high in a corrective structure right there. Sorry. So we have a corrective piece right here. This doesn't really look impulsive. Yeah, this entire move on the upside, as you can see, it's running in a channel. So the way I'm labeling it is as a WXY in an intermediate purple W, and then with this X running towards the upside, making a new all-time high, right? So remember, Nasdaq doing a new all-time high, but Dow Jones failing, right? Dow Jones making a lower uh, high, yeah, and S&P 500 again lower high. This is a typical divergence between indices, right? Which means that this move has not been justified, right? With the amounts of volumes. We have divergence here already, right? So the way I'm possibly seeing this is this A wave ending very, very soon or has ended right here. Okay, even if it drops a little bit right here, we do have the divergence. I mean, I do have the divergence right there. So the point is, I would be looking at this B wave, how it appears, because if it's a free, this would give me more indication for a possible drop. And the levels will be, of course, somewhere around there, 7,200 to as the closest one. So we'll see more on that. Now, let's say for instance, as a cherry on top of the cake, the Euro GBP seems to be making this type of ending diagonal here, possibly completing a pattern, and possibly finalizing this entire complex supermassive structure, right? And the structure is basically, this is a 4-hour chart. The main structure is W, X, A, B, C, right? This is how it's supposed to be, right? So the way I'm labeling it is as an a W, X, A, B, C with an ending diagonal in the C. And for me, ending diagonals are like unicorns, right? I would be looking for this type of structure with a bearish divergence at the top, if that even occurs. So keep that in mind. Now, obviously, this is what I wanted to do today on these charts to follow up on this quarterly report, but also to update and give you guys more feedback and possibly prepare you with your trading decisions this week. As I said, you can, if you wish, you can join the sessions or webinars that I'm frequently hosting right there. The next one is on the NFP. Non-farm payrolls on the 6th of July. On a Friday, of course, NFP non-farm employment change. What I'm going to do then is I'm going to analyze the charts live, stay during the release, analyze some more, witness the moves, and then analyze some more, and obviously, um, possibly making some forecasts. So yeah, that's it for the webinars. Now, as I said, for private sessions, you can actually reach out to me if you like what you see, of course, and if you wish to discuss more, if you want to share some opinions, do, however, open your live accounts so we can properly work together if you wish. Now, this was it for today. As I like to say to all my traders, until next time, stay in the green and many pips ahead. Thanks for watching.